Hello, and welcome to the $1 Trillion Opportunity. I'm Shannon Austin.
I'm Johan Bossini.
You know, the other day we were talking about something I think listeners can relate to, and it's about the assumptions that people make about where you're from. As you know, Johan, I'm from Nashville, Tennessee, which back in the day was a place that people thought, well, we didn't have very much. Probably thinking that we didn't have teeth or books or shoes. It's pretty rude. What kind of assumptions people make about where you're from, South Africa?
There have been a bunch of assumptions over the years. When I was younger and began to travel to Europe and the US, I recall many people asking me if I rode an elephant or a lion to school, which obviously is not the case.
It sounds like people just heard Africa and assumed you grew up in the jungle, right?
Exactly.
When we think about emerging markets, these kinds of assumptions can really blow up into full-blown blind spots over time, right? And you know what they say about assumptions, right, Johan?
They make out of you and me. This week on the podcast, we'll break down some of those assumptions. Here to help us are investment associates Ale from our Latin America team and Disha from our India and Southeast Asia team. Hey Ale, hey Disha.
Hey Johan, hey Shannon. Thanks for having us.
Hey Johan, hey Shannon. Great to be a part of this podcast.
So, Ale, tell us about where you are from and where you're living now.
I personally live in Mexico City, but I'm originally from Argentina, from Buenos Aires, and I went to grad school in the US. And then I lived for about 6 month stints in different places in London, the Netherlands, Paris for a month even. So in terms of what do people think about Latin America? Well, there's a lot of assumptions that we're great at soccer and great at partying, both of which are completely true. But oftentimes people forget that beyond that, we are actually very much involved in trying to solve some of our region's biggest problems through innovation and hard work.
Yeah, that's incredible. And Disha, what about you? Where are you from and where are you living now?
Yeah, so I presently live in Bangalore, but I was born in Delhi, where I spent most part of my early years, post which studies and work took me to various cities in India. So I spent time living in Kolkata, Hyderabad, Chennai, Mumbai, and now in Bangalore. So thinking of an assumption which most of the people think about India, well, what I have in mind is maybe an assumption, but more of a reality as well, that Indians love spicy food. And I'll totally second that.
I was getting ready to hear you break it to us that you don't like spicy food, and I was going to be so astonished, but you do. So, okay. Right. Thank you for clearing that up.
Over the years, we've heard a bunch of assumptions about emerging markets, as we've just discussed. And I guess that's the reason why we have both of you here today on this podcast, so you can enlighten us and share stories with us about what's happening locally from your perspective as investors.
So here's our first assumption. Banking in emerging markets like Africa is too disorganized. Johan, can you take this one?
Sure, absolutely. Big banks in a market like South Africa are actually really organized, far more than you'd expect. They offer great products. They service customers really well, both physically and digitally through a combination of online banking and apps. But having said this, they typically focus on serving two types of customers really well. These are the large enterprises in the country, and then really focused on smaller retail customers, but generally who are very homogenous. So this would be customers who are officially or formally employed with an income. This leaves out a whole bunch of people, really. In this case, I'd say two big categories come to mind, one being small and medium-sized businesses, and also informal retail customers. The first category is super interesting. Small and medium-sized businesses play a critical role in the country. 40% of the South African GDP comes from these companies, and they employ more than 60% of the working population. So it's not the large commercial opportunities that we find interesting, but really these small businesses that have such a positive impact on job creation in the country. And this is not unique to South Africa. We've seen this across many emerging markets and many countries in Africa.
So is there an example of that? Because you said that these companies are responsible for, a huge amount of GDP and significant job growth in South Africa, and yet they're underserved by these banks that are organized. So what's an example of a company that's kind of stepping in and how they're building something?
One relevant company in our portfolio that's worth highlighting is Lula. Lula decided to build new ways to assess smaller business risk, to be able to fund this category that they refer to as the missing middle. It's big enough to need meaningful working capital, but small enough not to be focused on by the banks. They've since launched a full digital SME bank for businesses to grow and thrive.
It's a really impressive story. It's such a great company based there in Cape Town where you are. Here's our second assumption. A lot of people assume that the most innovative things that are happening in fintech must be happening in developed markets like the US and the UK. But at Quona, we see incredible vitality and innovation in emerging markets. So Disha, what's happening in India?
India has a pretty conducive ecosystem when it comes to startups, especially financial services. The country is among the top 3 fintech destinations with more than 12,000 fintech companies. The only countries ahead of India are US and UK. The entire ecosystem is cumulatively valued over 100 billion. That being said, the financial services sector remains massively underpenetrated. So while this sector is large and growing, the country offers a massive opportunity for further growth. One interesting fact about the nation is that it has a very young population. About 68% of the nation's population is below the age of 39 years.
Wow.
And that brings in scope of a lot of innovation across multiple sectors. And we are seeing that really playing out quite well.
There's been a lot of buzz about India's IPO market. Why are investors so excited about this, do you think, Disha?
Well, you rightly pointed it out. So it's not just the private funding market. The IPO market is buzzing with numerous companies already listed or prepping for their listings over the next few years. India's public markets have shown strong resilience despite global volatility. The appetite for tech startups going public is growing, especially for companies that are profitable or nearing profitability. More than 25 VC-backed tech startups have already gone public, with another 40 expected to follow within the next 2 years.
So one of the things that we talk a lot about here at Quona is infrastructure and government and regulation and kind of where government plays a role in innovation happening or not happening. In this case, India's government made a lot of progress in terms of promoting financial inclusion and infrastructure. What are some of the highlights that you see as India taking great leaps forward in terms of regulatory action?
There has been quite a lot of general push by the government and regulatory bodies to promote financial inclusion. One of the key initiatives and what really excites me the most is the digital public infrastructure, the base foundational layer of which is unified identity, which is called Aadhaar. This is India's biometric ID system. Aadhaar is the world's largest digital ID program, revolutionizing access to services like subsidies, banking, and mobile connectivity. Secondly, UPI, which is a real-time payment system, has been a widely accepted hit, doing $250 billion in monthly transacting value and $15 billion in volume. The scale it has achieved is massive. The third key constituent of this India stack is the account aggregator system that enables secure data sharing across financial institutions. It streamlines access to personal financial information for services like loans and investment, fostering financial inclusion.
That's amazing, Disha. Wow, such opportunity in India. Well, let's wrap up with Latin America for assumptions. Latin America is known more for its soccer and perhaps its meat than its innovation, Ale. But that doesn't mean innovation isn't happening there. Tell us a little bit about what's going on.
Certainly not. Although we are the best at soccer, there's a lot of things happening. Innovation is definitely happening. For instance, Argentina and Uruguayan entrepreneurs have been building global companies for a long time. Let me give you 3 examples. There's a company called Technicis that is building core banking services. The ideal customer profile has been for a long time US mid-sized banks and was eventually sold to SoFi from all the potential acquirers and all the potential institutions for $1.1 billion a few years ago. Let me give you another example. Globant started selling in the American market 15 years ago and is now listed on NASDAQ with a market cap of $9 billion. And the last example that I also want to bring up is Auth0. It was a security company doing a lot of token verification and very complex things on the internet. And this company was acquired by Okta for $6.5 billion in 2021. And its services are exported and used globally. Today, we have a very healthy number of private companies penetrating the American and European markets.
That's incredible. But isn't part of the misconception the idea that Latin America is really fragmented?
Well, I mean, look, LATAM is not the US. I think no country is as large as the US, but the combined GDP of Latin America would actually make it the 3rd largest economy in the world. And if a company can penetrate multiple large markets like Brazil, Mexico, Colombia, Argentina, it really has potential to become a multi-billion-dollar company. Take Mercado Libre, for instance. Mercado Libre is a company that started in Argentina and started building its brand and building the company in multiple geographies simultaneously. Started off and really hit it off in Brazil. It took off a dominant market position in Chile and is now totally penetrated in Mexico and beating Amazon at its own game in Mexico. Mercado Libre is now a behemoth with $20 billion in annualized revenues, has multiple business lines from e-commerce to payments to lending. It had over 220 million direct users last year, and its market cap is currently north of $100 billion, making it the world's 171st largest company. And this is a fintech and tech company that is actually the largest company in Latin America as a whole. Mercado Libre actually translates to free markets.
That's hilarious. It seems like free markets are definitely thriving when you think about $100 billion market cap. Way to go.
The striking element about Mercado Libre is that it is actually growing at a very accelerated pace. It's still growing over 35% year over year and has a dominant position. It's really hard for companies to compete against it. Nubank's story is also incredible. Nubank recently became the world's largest neobank with more than 100 million customers. It has $12 billion in annualized revenue and a staggering 65% growth rate year over year as of Q2 of this year. In only 10 years, Nubank has managed to go from zero to a $65 billion market cap company that is actually listed on NASDAQ. In general, internet and mobile device penetrations is above the world average in LATAM and far more than other developing countries. Technology really offers the opportunity to scale the very best business models. These two companies are just incredible examples of models that linked with technology and a real problem of financially underserved populations can become regionally dominant and shadow all other companies and capture huge chunks of the market.
There's so many assumptions people make about emerging markets. We've barely scratched the surface in this episode. But it's great to have colleagues embedded in these communities where we're investing who can help us find the facts.
It's great to work with a global team.
Exactly. So that's all for this episode of The $1 Trillion Opportunity, and we hope you'll join us next time when we discuss how AI is transforming fintech in emerging markets.
Follow the $1 Trillion Opportunity on Apple Podcasts, Spotify, iHeartRadio, or whatever you listen to podcasts on.
The $1 Trillion Opportunity is produced by Quona and Pod People. Our producers are Danielle Roth, Hannah Pedersen, and Sam Gebauer. David DeLuca edits the show. Special thanks to Rachel King and Amy Machado.
We'll see you next week.